everyone. It's Saturday. Saturday 3 p.m. is my time with you. And I always have quite a bit of followings on Saturday 3 p.m. I don't know what you do on Saturday, but folks who follows me obviously is here. And you know that you don't have to be here at 3 if you just are really busy with your personal life. And our webinars is always at the YouTube channel, which I'm showing you right now. This is our YouTube channel, folks. And in the YouTube channel, if you go to Community CPA YouTube channel, you will find all of our webinars from before and also the one just aired. You need to go to live stream right here. Then you will see the webinar that we just started. We just did last week and this Friday or this Saturday. So make sure you come over here. Do you know that we are almost surpassed 5,000 subscribers and we want to pass 5,000 subscribers by the end of this month. So all we needed is not many people needed to come in to get there. We only have 30 more subscriber spots to bring us over to 5,000. Of course, our real goal was 20,000. And if you know anything about Susie Orman, and I actually, in my mind, I'm always comparing my channel with what she does. And she is my inspiration and is also my role model. And I want to be like her. And her subscribership is about 23,000. So that's why I have that particular goals. And with that said, this is our website, folks. If you come to our website, you click appointment, you're gonna find me. And you're also gonna know what's the availability that I have on my calendar. You can book my time, talk to me, especially if I have a specific question. After today's conversation, you may have more questions. That is all expected. That is normal. Because what we are introducing to you today, it is nothing short of a secret for our tax people, for our business people, and related to your tax. So every business person I met, they have time, they have those moments, those times they fail. And failing, I don't think it is something tattoo you and make you look certain way forever. No. And failing is learning. And in tax world, and failing doesn't equal to loss. Failing equals to possible tax advantage. So that is why we want to talk about tax journey of having a failed business. You may fail the first 6, be successful on the number 7. That's what my father, and he passed away 12 years ago, and he always tell me that in life, things you have to do it 7 times to be successful. So he told me that for language, you have to learn it and challenge yourself at least for 7 times for you to remember one word, one way or another. So if you learn a new vocabulary, you need to have that show up in your life 7 times in the different format before you can really make it yours. So same thing in business. My father also said you have to fail 7 times before you launch a successful one. And you know, I always think about what he said. So I have a lot of failures before, and the Community CPA is the company that I finally pull it through and it becomes successful. But that's not to say that I never really try anything else. I can spend another 2 hours tell you what I failed. But the point is, don't view your failure as a tattoo, and that is on you forever. Your failure is really a learning opportunity for you to learn your license so you can do a better business. Number 2, to figure out how to capitalize your failure in monetary sense. And you know, you heard of President Trump filed many bankruptcies, many failures, but that he didn't get tattooed for failing. And in business, he portrayed an image of success, right? So with that said, failing is a way to gain experience. Without overdue, and let me introduce myself to you. And several of you are new. I noticed that your sign-in is different than what I see from other people. So I have 20. I started this firm back in 1998. So I proudly claim it is mine. It is a creation of my mind, but got carried on by 40 people right now, and we are a very cohesive and tight team. And each one of us knows how to run our part. So we run this big machine and we're very successful. And I'm not understating that. And in our firm, we speak collectively 10 different languages. What do you think? It's pretty impressive, right? So we don't need privacy here, because if we just want to I want to talk to my mom, I speak Chinese, and I'm not too worried about people around me and understand what I'm saying, because we have languages all over the place here. And I have served at the federal committee to advise IRS for 3 years, from 2019 to 2022. So with that experience, I can bring to you a lot to this table of conversation, because I know what I am doing. I have a very strong credentials on my resume if I ever need to produce one. I am an author, so I wrote my first book in 2019 that is called Appointment with Ying at 8 a.m. And I also just finished, and it's about to be published because I already got the real book. So this is Appointment with Ying at 10 a.m. 10 a.m. is talk about how you grow your business. And I am doing my third book called Appointment with Ying at 2 p.m. 2 p.m. it is expansion of your business. Once you start a business at 8 a.m., you grow your business at 10 a.m. At 2 p.m., you're over the hump, you start to expand. You either merger, acquisition, or organic growth, or spreading yourself geographically, however you want to do it, and then you're coming to the stage where you call that expansion. That is the book I'm writing. It's also the journey Community CPA is walking through as we speak. So we are actually writing the book while we are living our life, right? I have the last book among the 3 business journey. The number 4 is 6 p.m. That is retiring from your business. I don't have any idea yet about that book. And someone asked me, what that book gonna say? And I said that there's only 1 page in that book right now, and that is called No Retirement. So it's just 2 words, and for that whole book. And of course, I know I will change my mind, but I just want you to know that writing this book is not merely just putting words in the page and becoming a book. It is really us writing our life. So I know that it will intrigue you and have you be interested to go on Amazon.com and look for our book and write our book. If you want me to autograph for you, I am in a lot of events, and you really can check our website to know where I am, and I will definitely do that. All my autograph, I start with your name. So I don't just write a sentence there for you, Happy New Year stuff, and I will know who you are, and I will write your autograph for that book you have. All right. No responsibility disclaimer. It is a routine matter, and this is a free webinar. So even though we have done a lot of research, we have put our heads together, we gone through reviews for our slides and for what I'm going to talk about, still there might be things that outdated, or Ying just misspoke because she doesn't speak English, whatever that happened, and there is a no responsibility disclaimers. But if you really want to rely on Ying's knowledge and on Community CPA, what you need to do is to just engage us to provide that professional service to you. All right, so let's talk about steps to close the business, because I fail, okay? I want to close that business. What are the steps? And I have 7 steps for you. I don't need you to memorize all of it or slides. You're gonna see our slides on the screen. If you feel like it's too overwhelming and you just want to listen to me, just take a snap picture or go back to our YouTube channel. You'll see those slides. Sometimes they carry my misspellings, but I apologize, and I could not apologize enough about my misspelling. Do you know that I learned English with word perfect? So they correct your spellings in a lot of ways, unless you are just literally replace a word that is similar to the one you want to use, but it's not the same meaning that happens to me. So with that said, I ask for forgiveness first, and then you take a picture of that slide. The content of it will be very useful to you. So number one step to close the business is a legal side of the business closure. Okay, so this is two things. There's a three bullet point. All of them need to be done, folks. All of them. So first of all, you need to close the EIN number. That number is the federal government issued to you for your business. You want to close that number. And then you also want to close with Secretary of State to file this thing called Statement of Dissolution. You want to get that in so officially close your business. Some people ask me that, oh, Ying, that's not right. I don't need to close the state. They just close it for me in about a year or two. That is so true. That is so true. If you don't do anything, they will go to do this administrative closure. So what's the difference between the statement of mine for dissolution and versus administratively closed by the state? What's the difference? Ladies and gentlemen, the difference is whether you are really dead or you are a missing person. Does that make sense? So when the state government come around to do administrative dissolution, that means that you didn't pay the fee and you disappeared and they don't know what you're doing. They declare missing person. Okay, that doesn't mean you're totally closed. You're just missing. And then the other way to do it, like the statement of dissolution, that would properly mark the last day of your closure. Why is that important? It is so important because anything happens after that day, you may not be liable. Of course, it is important, right? That's why it is important to mark the person is dead rather than saying the person went to Mars. We don't know where that person is. That still poses some possibilities for that person to come alive, right? All right. And on the legal side, permit and license are also very important. You need to cancel them. The permits, that depend on what business you are in. There's a permit that you have hold for the business that need to be terminated. And of course, insurance policy and your contract and your lease, all of these legally binding stuff need to be closed down. So that's on the legal side. That's number one. Number two, on income side, I want to say, I want to break this down to income side because the income side of things are the one would reopen your grave. You know, even though you closed, but it is going to be opened by the government and you owe taxes, they come to you. So with that said, what are the income side of consideration you need to keep in mind? Income coming from where? Your bank deposit is not income, but it can be viewed as income, right? So your income could come from your customer and your income come from your lenders, right? And your income that you get, and maybe your customer just sends you a work order. And tomorrow you close, they send you a work order today, they paid online, so you have that income. And if you have that income, you either need to pay taxes for it or you get the work done, so you pay less on the profit, right? So income is a consideration. You need to really crank your wheels to think about what kind of money is going to come into my account and the government is going to consider as my income. You may close the business in 2023, but you have an installment payment from a customer that comes to you every year in January for $100,000 and you totally forgot about it. Then you close on 2023, 2024 comes around, oh, I just got a $100,000 deposit from this customer, but I already closed my business. Now what do I do, Ying? And I don't know what to do. So you want to avoid that situation. Of course, I will tell you what to do. It's not the end of the world. And you will report that business income on your Schedule C if everything else got closed. But if it didn't get closed, you're still closing it, then pause it until you finish that deal, right? So there will be a solution. But before you close your business, you might as well just really think hard to figure out what to do with the income. And you may write to your customer, call your customer, goes, I want to close my business and this is your last payment. Is it possible that you pay me in 2023 so I can conclude my business properly and you don't have anything to pay me after that? So these are talking to your customer, right? And talking to your lender. Maybe your lender is SBA and maybe your lender is a local bank. And they loan money to you and you want to close the business, you are saying that I don't want to pay you back, sir, because my business failed and your loan to me, unfortunately, need to be written off. And that is not anything the bank will take personally. That is not anything SBA would be holding against you for the rest of your life. No. And depends on the loan agreement. And you might as well just walk away because you dissolved your business. So those liabilities null and void. But just hold on to that. If you did get forgiveness, if SBA goes, oh yeah, you don't have to pay me the rest of the money back, you're good. SBA will issue a 1099-C to your business. So you want to wait for that before you close your business. Ladies and gentlemen, you don't want to not knowing when that would come before you close, right? Same thing with lender. You can ask them, when are you going to give me 1099-C? And the lender may say that, we wrote off your loan for $60,000, but we got your personal guarantee, so we took from your saving account of $65,000, so you don't owe me anything on your business, and we are even. There's no 1099-C. Then you'll be sitting there goes, oh, what happened to that $65,000 out of my personal account? We will talk about that, okay? But now, I talked about income. The third bullet point on steps to close a business is expenses side of book. So, how to deal with your expense? You want to make a list of unpaid bills, okay? And the people who didn't get paid by you, they can choose to come after you even though you closed the business. So it is much better to have a very clear cutoff, closing, and maybe your business closed someone else using the same location, doing the same business, and so the vendors could come over to get them. They will be referring vendors to your home, and then you have the legal documentation to show that the business closed. The unpaid bills is unfortunately stay unpaid, so it is the other business's loss. Okay, so but those are the things you need to know ahead of time. Maybe some of the vendor you don't choose to not pay. And a good example would be, for legal firm and CPA firm. Sometimes folks need to file dissolution or even bankruptcy to go away from the paying the bills. But when you get to bankruptcy proceedings and doing legal battles, you always need the attorney, the CPAs to support you continuously. So writing off CPA firm is very rare. And I would not say that I have never been written off before. And our firm has been written off by people who took advantage of us. They came to us, filed their taxes, and promised that they're gonna pay, or they wrote us a bounced check. Then turn around, they file bankruptcy and write us off. And those are the people, of course they're doing it wrong, but then from our end, and we just want to make sure that we do not practice ourselves so unethically like people who are doing that to us. Those people, I don't need to punish them. God take care of them. So that is so proven with all these years practice we have, so we don't worry about people who does us wrong. And there's occasionally people doing that. But what I advise you about is you don't want to do that to your CPA folks, to your lawyers, because these are the people you needed them to support you along the way. You think you lost everything, you think you lose all your business and your money, but actually the CPA folks are the folks who can get some back for you. So, understand that and treat your vendor with a thoughtful plan and know who to pay, who not to pay, and terminating reoccurring bills that you set out there and you forgot. Okay, so those are the things when you taking steps to close your business, you want to close your reoccurring payment and the future expenses that you're gonna have. For example, you close your business right now, but you have to file your last tax return in 2024, right? So you already knew you're gonna have expenses at that time. What I would recommend you is go into your CPA office, talk to them about what would be the budget between now and the time I close out my taxes and have that amount be available paid ahead of time. And I say that because if we come across a client going through the steps to close the business, we try to explain to them about that because then they can close their bank account. Otherwise, if you don't close your bank account and you don't know what kind of promise you have given in the past, people might just happen to write a check, clear their payment, or has ACH going on with you, and there's just too many opportunities for you to continue paying bills that maybe a failed business should not be paying, right? And so that is on the expense side you want to consider. So we already covered the legal side, the income side, expense side. Let's talk about asset. Asset sales is very tricky because in your business, if you have equipment, for example, you are in a manufacturing business and you decide to close the manufacturer, and then your equipment has been used for 15 years already. Of course, if someone coming in to do the same business, they can use the equipment. But if nobody wants to come, I just close it because it's failed, and that equipment probably don't worth anything, right? So that is where you wanted to evaluate to know that what to do with your asset. You may sell for profit, for gain, you may sell for a loss, and you may totally write it off to be zero and claim all the loss, right? But maybe you have a truck or vehicle in your business and that belongs to your business. Before you close the business, you want to make sure the title has been changed from your business to something else, whoever bought it, or you decide to buy it. The vehicle is already depreciated down to zero, is not worth of anything. The Kelly Blue Book probably suggests $200, and then you can buy the vehicle for $200, give the $200 to the business, right? So business can use that to pay other bills. So asset is something that need a plan. So I want you to remember, if you are heavy in asset, when you close your business, be sure to consult a professional because it is not as easy as you thought and just, pretend you got rid of it. It is not like that. So make sure you consult professional. Employee side of books to close. When you close a business, you obviously let go of your employees. So they need to go on to unemployment insurance, that you need to support that. So you still need somebody continue to work on your payroll. If your payroll is done by community CPA, those are the things we will do for you. We continue monitor the claims and we continue file quarterly report. And then at the end of the year, we file your 1089 W-2 and we also file your 940. So, there are things has to be done at the end of the year. We can't do it early. So these are the things you cannot say, oh, I closed in March, goodbye, I disappear. No, you close in March, I need to see you again in January next year. So that employee side of closure, very sensitive. If you have 401k plan, cash balance plan, those all need to be closed out. Ladies and gentlemen, I'm telling you, these takes time. So make sure that you give yourself ample time to take care of your employees, and don't ever leave the business without taking care of the people who work for you. And I'm not going to give you a pep talk about, that's human right, that is your good heart. And no, I'm not even talking about that. I am talking about to peacefully depart so you don't end up with a lawsuit, okay? After you close your business for a year and some employee find they got a head injury while they were at your place and they hate you good enough that, and knowing that you don't care, and they sue you. What are you gonna do? You are liable, ladies and gentlemen. So people are the highest risk in our life, whether it's business or non-business. People are the one creating things. Insurrection didn't come without people, okay? So it is all people's doing, and it comes down to taking care of people. That should be your priority. It is, don't care you have a good heart or bad heart, an okay heart whatsoever, and you just need to take care of people, because people are something that will give you peace and also can be something that give you trouble. And you see that plenty nowadays on internet, don't you? And I see that. So with that said, make sure you take care of your employee. Public announcement is also important. That is our number 6. Public announcement is to let everybody know you close that business. If you don't make such a public announcement, there will be people claiming that they didn't know, so they suffered this and that and whatsoever. So you want to make sure that the public knows, and at least if you ever needed to prove when your business closed, you can pull out the public announcement, showcase you have done that properly, right? And it is also important on the website. If you don't take care of the public side of presentation, you might leave the merchant account still open on your website, and you might be paying merchant fees and you didn't even know. And you might be, making certain claims on your website that should not be granting anymore, but now because you didn't say you closed, so people can still hop onto that and use that. So there's so many reasons for you to take care of your public side of the image and the presentation, to make sure that you close down every channel that would cause you to have income, expenses, or asset related issues, right? The last but not the least, it is the tax return. It's the final tax return. You see, I said tax return. I didn't say it is an income tax return. I also did not say it's a sales tax return. I also certainly did not mention it is a payroll tax return. But these are all relevant, most common, normal taxes you would face when you have a business. So when you close your business, you need to file your final income tax return. You need to file your sales tax return final. Close your sales tax permit. You need to file your 941, 940, unemployment insurance, workers' comp final. Okay, all of these need to come into play. Sometimes the final is not right away final. You close your business in March, your final is next year, April. So it is kind of dragged away, but if you work your business in one place, you go back to that place, have the CPA firm or law firm folks to help you to budget for what you need and timeline it out so it get done. Just don't forget it. Now, steps to close business, 7 of them. Now, let's talk about tax implementations. So that is kind of the surrounding topics related to closure, right? So, I failed, why do I care? I hear that all the time. I sometimes would chase after a taxpayer because I know he failed a business venture, but when he came over to do taxes, he mentioned nothing about that business venture. And I asked, what happened to that business venture? He goes, oh, I I lost a lot of money. It doesn't matter. It doesn't do anything for my taxes. Oh, really? It doesn't do anything to your taxes? I don't agree with that. So this is where I want to say that the failure in business has everything, have to have something, a lot of things related to your money, related to your benefit. Do I want to call that benefit? Nah. And it's just tax refund. It's additional money come back to you, okay? The importance of understanding these implementations, it is, of course, it's complying with the law and regulations, but the key is to minimize your tax liability. Do you know that you close your business, you could generate a big tax bill for yourself because you close? And you say, oh no, don't let that happen. I closed because I don't make it. What do you mean I have a big tax liability? Yeah, that's true. There are people doing that. And I won't say that I have these people every day. That would be an exaggeration. But if you ask me, do you meet these people every month? I would think about it and say, yeah, I meet them at least every month. They don't all come once every month, but sometimes I see a couple of them. And during the recession time, when the economy is not as great, since pandemic, we have been different struggles, right? So there's different reasons for people to close out the business. Sometimes, the owner died from COVID and things like that. And, we have seen people losing money in their business for many, many years. And when they closed, they ended up with $60,000 tax liability bill. You want to know how they got it? I'll tell you. And minimize tax liabilities is one of the reasons why you want to understand the tax journey in your closed business. And utilizing losses. Utilizing losses just means that bring benefit to the future, bring benefit to today, okay? And protect personal asset. Of course, that's true. If you are in business, the first thing you did was to separate your business from your personal, right? You want to do that. You do that. You did that. And those are the things you want to be sure that is in place when you close the business. So people, your customer, or your lender, your landlord, doesn't knock your door on things, okay? And preserving your reputation. I can say that if you don't care, I don't care for you, and you can trash it. You can say that I don't care about my reputation and business. That business called this name is trashed, is trashed. I don't use that name again, so it's not important. Okay, the number 5 is not important. The first four things are important. Am I right? All right. So let's go about tax implications after closure. You might owe taxes. I want to bring this out to the first ideas I give you. You close your business. If you're not closing it properly, you owe taxes. Yeah. And let me kind of walk you through why you owe taxes. I simply listed the 7 steps where we close the business, right? And the legal side of business, if you did not close that properly, you owe taxes because you remember if you don't close your sales tax permit and your sales tax folks don't know you closed it. So what they do, they send you a bill and with estimate of the sales tax you're supposedly to pay, and now you didn't pay, so that would be your tax liability. And if you can articulate or you can prove that you properly closed the business, and they can come back and say, yeah, you still owe me, you have penalty. So not closing it properly legally will trigger you to have tax liability. And if you are not closing out your loan or dealing with your landlord effectively, properly, and you could be ending up with a 1099-C, the loan write-off, and that become your income, right? So you want to mitigate that and figure it out how to treat your income side of the book, your expense side. I mean, this one may not make you owe taxes, but it's gonna make you owe money to other people. And you may have expenses that you totally forgot. Now you close the company, the vendor just gonna go to you personally and you need to pay. Then you ended up with writing your personal check to pay for it, right? So these are the things you would end up paying if you are not closing it properly. And the asset side of the book, if you have a vehicle and you sold that to yourself for $200, and if the vehicles had written off $19,000 on depreciation, and you know that there is a recapture rule coming in to recapture those depreciation that you deducted from the past to be an income today. So you want to know that the sales price that you got, and you will end up paying additional, not only just for capital gain, because your $200 is your capital gain. Your car was nothing because you already wrote it off. So you sold for $200, you got $200 capital gain. And then your recapture gain of the depreciation you wrote off, that would come in as part of the income. You see how the asset sale may end up give you recapture income. Those are regular income tax. They're not capital gain, capped at 20%. Okay, folks? And the employee side of book to close, this is another one we say that need to be closed properly. And you may owe taxes because maybe your last quarter of payroll taxes was not paid properly. You closed your bank too early, and then the government lost their chance to take your money out. You ended up paying that amount. Or your W-2 wasn't filed timely and you pay penalty. So those are possibilities coming in to make you owe taxes. And with the final tax filing, yeah, you want to file your final taxes so carefully, and your final tax is literally like bibliography of your business. And you want to make sure that everything is done properly and everything is stated correctly, and you can really send that to history, okay? And the final tax form, the final tax filing is actually something that at our firm we go through a special review for closed business, just because not only we need the income statement, balance sheet, and to completely closed out on the tax forms, and we also need to do the book and tax reconciliation to have the permanent differences become the temporary differences become permanent, so we can close your company. There's a lot more things that you would learn when you come to proper close your business. So don't end up paying more taxes, because if you don't do it properly, you end up, after closure, you end up have a bill to pay. All right, and you might get, someone says that, well, Ying, you just said the tax implications might also include getting tax money back. Of course I said that. And of course that's a reality for many failed businesses, for our entrepreneurs. And that is the tax benefit the government give out to the entrepreneurs, right? So business losses can be used for tax deduction, folks. If your business is closed with a financial loss, and you can potentially use these loss to offset your income that your income that you made elsewhere. For example, if I run a business, I lost money, and I also work at community CPA, I'm getting a W-2 income. So I can use my W-2 income minus the loss I have, then I pay less taxes. So that is the idea where we say the business loss to offset other taxable income that you have, all right? And if business sold asset during the closure process, and it may need to report the capital loss on the asset. Maybe your asset still worth some money, but you sold for less. Say the asset is $13,000 on the book. you sold for $1, then you have a capital loss, right? And these are the capital loss will offset your capital gain. So the capital gain you're supposed to pay taxes, it will be offset by the loss, so you don't pay taxes. In the way you save taxes, right? And of course, there's also the losses you have. You're not losing it. You say, well, Ying, I am very unfortunate because I don't have any other income. When I lost my business, I was so poor, I could not even survive. Not to say I have a W-2 income. I don't. Don't worry. It's okay. If you don't have anything to offset the losses you got, and it will be carried forward to the next 20 years, are you going to tell me that you will never make any money for the next 20 years to come? Really? Nobody have ever told me that. So I always knew you will take advantage of that. Of course, a side comments on that is when you have those carry forward losses, like those historical thing, and you don't want to change your tax preparer like baby change diapers. And I mean, we don't have that kind of taxpayers in our firm. People stay with us for a long time. But if you do, if you're that kind of person going from John Smith to Smith Johns and changing your preparers every year, you want to be really careful about those carrying values on your return that need to be written with a new preparer. And in our firm, when we get a new tax return, if you are our new client, we actually have a step that's specifically pulling all your carry forward money, all your carry forward values, loss, gain, whatever that is, and we carry that. Sometimes if we know you are the kind of person had changed the preparer several times, then we actually ask you to give us more tax returns because we want to make sure it got carried for you. So that is a side comment, folks. I want you to remember that, okay? Only you would know for sure that is important because sometimes you go to the tax preparer, they didn't do it for you and you don't know to ask, then you just plain lose. All right, now the other one is paying taxes on income you do not have. Okay, that could be a after closure dilemma that you have. So example we give you that is the business may be reported to write, maybe was giving opportunity to not pay the bank loans, for example, right? Let's say I'm the bank, you borrowed $100,000 from me, then you dissolve your company, and that $100,000 when I loan it to you, there's no personal guarantees and it's just under the business name and under business, collateralized by your business asset. And what if your business asset worth nothing? The bank don't even have a way to sell it or to salvage it. And so the bank will write off the loan. And when bank write off that loan, you get a 1099-C, that's $100,000. You see, when you lose in business, you are already at such a pickle time, then you get another $100,000 as an income coming to you. So you need to pay taxes, but you don't have it. So with this kind of saying, and we always want the business owner, if you have such a situation with you, it is so smart to get a consultation service, to get a business closure consultation with community CPA or with your trusted attorney, and or even with your family members to really discuss about these type of things. Don't put yourself in a situation where you pay taxes on money you really don't have. You already spent it, all right? Then of course, this slide I have, this is a slide I was talking about, and the paying income tax on 1099-C. And if you personally guaranteed your loan or lease, that is going to you personally. on Tuesday, I talked about personally guarantee, how to account for that. So you can actually go back to our history of webinar, go look for that webinar. If you personally guaranteed anything, I want you to hear. And here what I'm saying is that when you close your business, if you personally guaranteed something, you know you can close that one. It will follow you to your personal life, okay? And this particular one, I was talking about this one, it is the asset disposition, because asset disposition is tricky. And remember I mentioned to you that if you have a huge asset and need to disposition because of closure of the business, or even because of you sell the business, and you want some consultation work on this one because the knowledge is deep, and you don't want to end up paying capital gain, regular income tax, or capital gain, and then, you know, in reality you feel like you have a loss, right? So make sure that this is one particular area. It is not so easy to close, but it's not hard either if you can consult with someone who has that part of the knowledge. All right. So with that said, I come to our slides related to the closure, that what tax structure you have for your business, how that impacts you on the closure. So this is a huge topic. This is where I say that if you were going to close your 1120C C corporation, and when you close it, you have all these losses, and you know, are you going to treat that losses as a capital gain, a capital loss, so you can only write off $3,000 a year, or and you have other ways to write off the losses 100% in 1 year against your other income on your 1040. And I know you like the latter better. You were like, oh yeah, Ying, I want that. And how do I get there? So there is a section of the tax code, and it is 1244. Sorry, I just suddenly blank out. I think it's section 1244, and where you can apply that, then deduct your losses against your regular income. You don't have to really get into become a tax professional. All you need to do to eardrop on those little things. So when you get into your situation, you can wisely come out to talk to your tax preparer. Oh, I know there is a way, you know, I don't have to deduct my losses $3,000 a year. There's a better way to do that. Can you look into that? You know, I don't know where I heard that. I just know it. Right? If you don't want to tell people you heard from community CPA, and you can just do that. So then your tax preparer, they would research it for you. And then your $100,000 loss don't have to go for 30 years to deduct. You can deduct that in 1 year. If you happen to make W-2 for $100,000, that just means that particular year you are not gonna pay any taxes. You have taxable income 0, right? And so that's 1120C. So of course in the Schedule C sole proprietor situation, and if you have losses and that loss directly reduce your other income on your 1040. If you have 1120S and 1065, those are pass-through entity. The losses has already gone through your K1 to be deducted each year on your tax return. So if the last year you got so much loss, there need to be a calculation between the loss and your leftover basis. So maybe the losses are not going to be written off because you have no basis. Okay. In a small business world, I always tell my folks that at Community CPA, it is very difficult for small business owners who are running business without a base. Because it's not like they can get some bank loans that is not personally guaranteed. It is not like they can dream up some money that is not theirs. And for larger business, there's a lot of ways to do that. For small business, there isn't. So a lot of time you have enough basis to deduct those losses, but not to say that everybody is peanut butter approach, they're all the same. That's not true, okay? All right, and the carry back and carry forward options. I have a lot of people ask that questions. I want you to understand this in a very general term. If your business loss is before 2020, so if you have a business loss in 2020, 2019, 2018, you can carry back. You can carry back 5 years, which means that you can take the loss, go to 2015. If you pay taxes, you can get taxes back from that time. Okay, that's called carry back. Carry forward 20 years, that is after 2020. After 2020, and the business loss carry forward forever to 20 years forward, and then to offset your future gain. So just remember that the business loss is not really lost. And even if you didn't utilize it this year because you don't have anything to offset, then it get carried forward for you. All right. Now, one general mention about tax implementations after closure, you want to pay attention to your state, okay? And for the state, and you want to consider the state taxes and to see whether this kind of business has a special rules over it. And in terms of write-off, you know, 1099-C, what kind of rules the state has for you to write it off or not. And so the state, we don't spend time on here. And when you work with your tax preparers, and they always need to know which state you're working on. Like we work on a lot of state taxes here at Community CPA because we are very much an internet-based company, even though we have 4 branches with people, with 40 professionals, but you know, a lot of our clients, a big piece of our clients are remote clients, which means they're from different states. So every state has its rules, and we always make sure that the state rules are being covered when we consider your tax implementations after your closure, once you made a decision you want to close. Okay, all right, and we are at our last slides for today related to business closure. Every closure is unique. I want you to know that. And there is no such thing that I can sit here in 60 minutes, give you the solution to everything. I know you had more questions now than when you come over. So with that said, and you want to make sure that just be aware, business loss is not exactly loss dollar to dollar. Business loss bears possibility for you to get some tax refund. And the business loss gives you opportunities to offset your future gains. So just keep that in mind and treat business loss as a bank deposit. That is that precious. You want to keep it. You don't want to, feel shy or feel defeated and don't want to mention to everybody. No, you lost. But that loss needs to come in to help you. Okay, rely on Community CPA and rely on our webinar and give us the topic, we talk to you, and rely on other professionals so that way you can do your things right. Folks, knowledge is power. And if you know it, you know it. And knowledge is power is so powerful. You see how history plays out by the knowledge people have being implemented in political movement, in financial movement, and even becoming product of certain financial companies. So those are all knowledge. If you're a business owner, I challenge you to become knowledgeable in what to do when you fail business. That knowledge will always be with you, will serve you, will reduce your anxiety for failing, because failing is necessary before we become successful. Now, our phone number is 515-288-3188. And that is a number opens Monday to Saturday. You call us on Saturday, real person pick up the phone because we're open on Saturday. And Catherine at communitycpa.com, that's where Catherine is collecting your questions. So we can be better serve you online and give you the knowledge you are thirsty for. And I will see you again